Hey, what's going on, everybody? It's Brandon back here with another video for you guys today. Thank you so much for watching. It means so much to me. And today we're going to be talking about more beginners options trading, kind of options guidance for beginners out there that are looking to really improve upon what they're doing and what's going on with them and their account. But it's basically just going to be options beginners and how to manage your account better and how to really look at your account the correct way and try to really get you guys going in the right direction. But before I get into that, make sure to hit that sub button down below. It takes like 1 second to do, and smash the like button if you like today's video and the content I put out, as I post videos Monday through Friday, and I talk about everything under the financial umbrella, whether it's the stock market, financial news, everything in between. So if you're interested in those things, hit that button and you won't be disappointed, I promise. But let's go ahead and get into today's video. So before I get into the finer details of it, I want to preface it with saying, if you do have an options account, I strongly recommend that you get a long-term account too. Whether it's in the same exact account or if it's with a different brokerage, whatever it is, I highly recommend that all of you guys get your own brokerage accounts that has a long-term mindset involved. Because I've said this in a lot of videos in the past, I'm going to keep saying it too. Having a long-term account with an options account is the best way to go in the stock market, because it allows you to take advantage of short-term volatility while having the safety of a long-term account at your side. So even if you're having a bad options week, you can always have your long-term account to look back at and rely on. So make sure you have that. That's the main #1 point for you guys today. Please get that. And also, I'll drop my Robinhood link down below if any of you guys are looking to either get a different brokerage account or you're just wanting to start your first one. It's down below. Gives you a free stock, gives me a free stock, so everybody wins. So if you do that, great. But on to the next point. So now that you have your long-term account set up and you're still wanting to trade options, you're committed to it, what I would suggest, and also, I'm not a financial advisor, do not listen to any of this video purely for entertainment purposes only. If you do anything I suggest in this video, you're likely to lose money. But, okay, that's enough with all the caveats. Now, let's focus. But out of your total account value, including your long-term account, I would only suggest using 10% of that account value towards your options account. So, say you have $1,000 you're wanting to put in to the stock market, I would do $900 into a long-term account and $100 into options trading. And now you may be upset about it and say, oh, well, I can't do all the plays I want to do. Now I can't do this and that. Don't worry about the things you can't do. Focus on the things that you are able to do and really maximize that before you look outwards. Because if you're trying to spend hundreds and hundreds of dollars on single option plays, you don't understand options and you're trying to over leverage yourself and you're gonna blow up your account. So you really have to only use a small part of your account to really make significant gains. So remember, only do about 10% of your total account value. And now this next point I have is, I already kind of said it, but it's do not over leverage yourself at all. And what I mean by this is, don't go all in on one play, and because if you do that, you could get lucky and it could pay out very well for you, but on the more likely chance that it does not pay off and that expire option's worthless or loses value very quickly, you're going to be out your entire account within a week or however long that expiration is. And it's not a fun spot to be in when you're over leveraged. I know when I was first starting out, I over leveraged a lot and it paid off a couple times, but then I really got hurt bad. And that's just with options. You can lose all the money that you put in. So if you're putting in all of your account, you could lose all of your account in one trade. And that's not something any of us want to do. I know it's very tempting to try to do that because you just think of all the potential gain. But what your mindset really needs to be, yeah, the gain could be there, but you got to also understand that loss would be huge for your account. It'd be a big detriment to it. So you really have to counteract that and really fight yourself to not over leverage in any one position. And now the next thing about managing your account with options is don't go heavy into weeklies. And for those of you that don't know what weeklies are, it's just option contracts that expire the current week that you're in. So today is Wednesday, so you'd be looking at contracts expiring on the 15th of this month, so like 2 days from now. And they are very high risk, high reward kind of items. They can shoot your account value up very quickly, but they can also drop your account very quickly. So these are things you have to really understand and comprehend, because if you're putting all your account into an options contract that expires in 2 days and it doesn't go the way you want, you can lose all your money in 2 days. Now that doesn't sound very fun to me, nor does it sound smart. It's not a way to go at all when you're managing your options account and really trying to get it to grow and supplement your long-term with it, or complement, I should say, rather. It's definitely okay if you want to take a small chance, small little gamble on a weekly contract to see where it will go, but it does not make sense to put half your account into a weekly contract expecting it to go to the moon, that you can 10x your account in 2 days. It's not unheard of for that to happen, but vast majority of the time you are gonna be left out in the dark and you're gonna lose your money that you put into that contract. So very small into weeklies if you're even gonna play them at all. And now the next point I want to talk about, and this one's very important for a lot of you guys to understand. If you're just buying calls and buying puts, you have to understand a lot of those plays are not gonna hit. And what I say by that is that most options contracts actually expire worthless. So you have to understand this going in. Now, if you're able to hit like a 500% play, 300% play, then you're only going to need to hit about 1 out of every 5 trades to go break even, maybe a little bit higher. So as long as you're hitting anywhere between 20 and 40% success rate, you're probably going to be making money by buying options. And that's actually a pretty good percentage, especially if you're getting that huge percent gain and your losers are small. That's another reason why you want to go in smaller. So that way, if you lose, it's only a small amount. And if you win, it turns into a lot bigger of an amount. Because easy math, say you put $100 into a play and you lose it all. That sucks. It's $100 in the grand scheme of things. But say you put that $100 into another play and it hits, and say this one really rips up and you make 1,000% on it, you're gonna be making $1,000 on $100. And that's pretty exciting. And then that would cancel out like 10 bad trades. So if you can hit 1,000%, it'll cancel out like 10 trades as long as you're going in with the same amount per trade. And now that's just something, do not expect to win every options play. It's not realistic. It's very likely not going to happen. So you just have to focus on making the smart choices and the ones that are destined to go up quickly and to make you the most money. And now the next one I want to talk about, now this one is the opposite side of what I just talked about. You need to learn how to sell premium. And I have a pretty good video going in depth about how to sell credit spreads. So if you're interested in the more safe side of options, I will leave a link down to that video down below. It just goes step by step how to buy a credit spread, how much credit you receive, so on and so forth. It's a really in-depth video, and I think it would really help you guys out if you're really looking to add that tool to your toolbox. But selling premium is the smartest, most consistent way to build income trading options. This is what all the big successful people trading options do, the people with a lot of money. They sell cash secured puts, they sell covered calls, they sell vertical spreads, which are credit spreads. And it is by far and away a lot easier to make money with that compared to buying options just outright. Now, little disclaimer with selling premium, you don't make as much money, but you're a lot more guaranteed to make money. Especially selling credit spreads, as long as you're not being too risky with it, you can get like 90% chance that you're gonna make profit. So you could hit 9 out of every 10, maybe even more depending on how you pivot. And compared to options where you might hit 1 out of every 5 if you're lucky. So a great way to do it is selling premium to slowly get the gains going in and buying an option whenever you see a weakness in the market or you see an opportunity. So if you're able to kind of use those two together, that's the best possible way to start building your options account up. So selling premium is definitely going to be your friend, and remember to check out that credit spread video down below. It's really helpful. And now this next point kind of goes into the over-leveraging one I brought up earlier, but this one's definitely more if you have a smaller account. It's easier to go over-leverage quicker, but I would suggest putting no more than 33% of your account up for risk. Now, just make it easy. $100 option account, only put like $33 per trade up, so that way if it goes against you, you don't lose your whole account. And I know some of it's tempting, especially if you want to average down on it. I know that one is really tempting to average down big, but do not put more than a third of your account in. You'll be very grateful that you didn't. It'll help you out so much in the long run, and it'll keep your account there. If something bad happens, you'll still have majority of your account there to lean back on, and it is just the smart way to go about trading options. And the next point, when it comes to managing your options account and just your portfolio in general, don't feel pressure to use all of your day trades. And the reason why I say this, because when I started out, I saw I had 3 day trades I could use, and I thought I needed to use them almost as soon as I got them available to me again. While day trades can definitely be beneficial in certain marketplaces and certain points in time, you don't always need to use them. In fact, you should almost aim not to really use day trades, because once you start day trading, it can kind of go into a rabbit hole, and vast majority of people that do that lose money. So you just be very wary when it comes to day trading. Can you make money doing it? Absolutely. I would just make sure you're learning what you're doing and understand the full scope of what you're doing before you really try to hop into day trading, because day trading can be the one where you lose the most money, especially if you're trading same day contracts or contracts that expire the next day, as it is very volatile and there's huge swings in your account if you start doing that. So don't feel pressure to do your day trades if you don't have to. They're there if you need them, but you don't have to use them. And this next one is a little bit more reality hitting, but whatever you put into a option play, just be prepared to lose that amount. So going back to, like say you want to buy a call and you don't want to go more than 33% in. So you buy a $30 call. Well, as much as you may want it to hit, you shouldn't expect to get any money from that. Expect your account to be at $70 and try to pivot from there. Maybe sell some premium to make up that $30, or find a way in which you can account for that $30 not being there. And if you're able to do that, that'll make your account feel way bigger, especially when an option play hits. It'll be a crazy relief. You'll say, oh wow, I wasn't even counting on that money. I already had that money out of my mind. I wasn't thinking about it at all. And it's something that'll actually really help you too in not wanting to spend more money on option plays in the future. So that way you won't want to have to go 50% in a play, because in your mind you're like, oh, I don't only want to have $50 left. So you will definitely try to stay away from over leveraging yourself a little bit more if you think about it in that context. Now, a lot of those were points kind of for more beginners that are looking to manage their portfolio, especially when it comes to options trading, some tips and tricks. I hope that helps you guys out. Even if you're not a beginner, maybe that's some information in here that you weren't aware of. But if any of this information helped you guys, drop a comment and say what helped you. Maybe another tip that you could think of to drop down below. I'd love to hear from you guys. And if any of you guys want to hear about any particular video topics in the future, drop a comment below too. I'll look at it, I'll respond to it, and I'll try to make a video out of it in the future. But with all that being said, I really appreciate you guys watching this video, especially those of you that made it to this point. I appreciate you guys more than you really know. And make sure to hit that sub button if you haven't yet. I'm watching you. And hit that like button. And I think with all that out of the way, I don't have anything left to say. So I hope you guys have a good rest of your day. I'll see you tomorrow.